Assalamualaikum warahmatullahi wabarakatuh. Welcome to my video. In this opportunity, I'd like to explain you about the core financial statements by Walther and Skousen. Okay, let's begin. The core financial statements. Your future will undoubtedly be marked by numerous decisions about investing money in the capital stock of some corporations. Another option that will present itself is to lend money to a company either directly or by buying the company's debt instruments known as bonds. Stocks and bonds are two of the most prevalent financial instruments of the modern global economy. The financial press and television devote seemingly endless coverage to headline events pertaining to large public corporations. Public companies are those with securities that are readily available for purchase or sale through organized stock markets. Many more companies are private, meaning their stock and debt is in the hand of a narrow group of investors and banks. If you're contemplating an investment in a public or private entity, there is certain information you will logically seek to guide your decision process. What types of information will you desire? What do you want to know about the companies in which you are considering an investment? Or if you were to prepare a list of questions for the company's management, what subjects will be included? Whether this challenge is posed to a sophisticated investor to a new business student, the listing almost always includes the same basic components. What are the corporate assets? Where does the company operate? What are the key products? How much income is being generated? Does the company pay dividend? What is the corporate policy on ethics and environmental responsibility? Many such topics are noted within the illustrated cloud. Some of these topics are financially in nature. Other topics are of more general interest and cannot be communicated in strict mathematical terms. Financial accounting seeks to directly report information for the topic noted in blue. Additional supplements disclosure frequently provide insight about subjects such as those noted in red. But you would also need to gain additional information by reviewing corporate websites, filling with the securities regulator, financial journal and magazines, and other such sources. These events are very valuable in allowing investors and creditors to make informed decisions about a company as well as providing a forum for direct questioning of management. You might even call a company and seek special insight about emerging trends and developments. Beware, however, that the company will likely not to be able to respond in a meaningful way. Securities laws have very distinct rules and penalties that are meant to limit selective or unique disclosures to any one investor's group. It's amusing but rarely helpful to review managed boards where people anonymously post their opinion about a company. Financial statements. Financial accounting information is conveyed through a standardized set of reports. You have already been introduced to the balance sheet. The other fundamental financial statements are the income statements, statement of retained earnings, and statement of cash flow. There are many rules that govern the form and content to each financial statement. At the same time, those rules are not too rigid as a preclude variation in the exact structure or layout. For instance, the earlier illustration for Edelweiss was first presented as a horizontal layout of the balance sheet. Income statements. A summary of an entity result of operation for a specified period of time is reflected in the income statement, as it provides information about the revenue generated and expenses incurred. The difference between the revenue and expenses is identified as the net income or net loss. The income statements can be prepared using a single step or a multiple steps approach and might be further modified to include a number of special disclosures related to unique items. The statement of retained earnings. The statement of retained earnings provides a succinct reporting of this change in retained earnings from one period to the next. In a sense, the statement is nothing more than a reconciliation or bird's eye view of the bridge between the retained earning amounts appearing on two successive balance sheets. If you examine very many sets of financial statements, you will soon discover that many companies provide an expanded statement of stockholders' equity in lieu of the required statement of retained earnings. The statement of stockholders' equity portrays not only the change in retained earnings, but also change in other equity accounts such as capital stock. Balance sheet. The balance sheet focuses on the accounting equation by revealing the economic sources owned by an entity and the claim against those sources. The balance sheet is prepared as of a specific date, whereas the income statement and statement of retained earnings cover a period of time. Accordingly, it's sometimes said that balance sheet portray financial positions while other statements reflect results of operations. Statement of cash flows. The statement of the cash flows tells the enterprise cash flows. This operating statement reveals how cash is generated and expended during a specific period of time. It consists of three unique sections that isolate the cash inflows and outflows attributable to operating activities, investing activities, and financing activities. Notice that the cash provided by operation is not the same thing as net income found in the income statement. This result occurs because some items hit income and cash flow in different periods. For instance, remember how Edelweiss generated income from a service provided on account. The transaction increased income without a similar effect on cash. Articulation. It's important for you to take note of the fact that the income statement of retained earnings and balance sheet particularly. This means they are meshed together in self-balancing fashion. The income for the period ties into the statement of retained earnings, and the ending retained earnings ties into the balance sheet. The final tie-in causes the balance sheet to balance. Unlocking the mystery of articulation. It seems almost magical that the final tie-in of retained earnings will exactly cause the balance sheet to balance. This is reflective of the brilliance of Pacioli model and is indicative of why it has survived of centuries. Okay, that's all about my explanation. I hope this can be useful for you, and for less and more I do apologize. Okay, thank you for watching. Wassalamualaikum warahmatullahi wabarakatuh.